freedom builders, and welcome back to the channel. The topic for today is trends and trend channels. I guess you've all heard the phrase, the quote saying the trend is your friend. But what does that mean and how do we use it when we're looking at a chart? Today we're going to look at trends. We're going to look at some of the basics here on the whiteboard. We are going to look into my laptop over here where I'm going to show you some live examples, and at the end of the video I'm going to give you a tip to Tradingview that I use every single day to make the trend channels absolutely, completely, automatically, so I don't have to think. Doesn't that sound nice? Alright, let's get to it. If you haven't done already, remember to subscribe to the channel, hit the like notification, or that bell notification down there, so that YouTube knows that you want more of this stuff. Alright, let's get to the whiteboard here. When we are talking about trends, normally of course we are looking for an uptrend, at least in stock investing. And that of course is because we want a stock that grows in price. But what a trend actually is, how it is composed, is that we have some sort of point in our chart here, and at that point some buyers are getting in and they start to buy a stock. And that means, at least if the buyers are the strongest, it means that the price will start to climb. But then at some point we have some other, maybe the same buyer that now wants to sell, but it could also be other market participants with other time frames. There might be some shorter term traders here thinking, now this has gone up just enough, so I'm going to take my profit and I'm going to sell. But all of the buyers down here, or at least some of them bought here, but maybe some of the participants in the market thought, oh, I wish I had been on this trend, so now I'm going to wait for the dip, as we say, buy on the dip. So when these guys are taking profit and the price drops a little bit, then new buyers are coming in and they are forcing the price up. Someone is taking profit or is selling because they have reached their target or whatever, so the price drops a bit, new buyers are getting in, and this is how a trend is formed. And when we are talking about an uptrend, we are talking about what is called higher lows and higher highs. So here is a low, here is a higher low because it is higher than this one. This is a higher low as well. Here we have a higher high and we have a higher high and so on. Now what we're going to talk about today is trend channels. And when we see a structure like this on a chart, we can start to draw some lines showing that it seems like the price is moving between two boundaries, and it can be a bit hard. You can train your eyes to see it, but it can be a bit difficult to get a grasp on this concept here, and that's why I'm going to teach you at the end of the video how to do it absolutely automatically. But at some point we see that we have this trend channel going up, but all of a sudden maybe the first long-term participants down here, they think now our target has been reached. So they start to sell out of their stocks and it maybe even breaks the channel. Now some of the buyers down here, they're thinking we'll just buy on the dip. So they start buying, and that is what the big guys have been waiting for. So they're thinking, yes, now it bounced a bit up, so we are going to sell again. And they start to force the price down, so all of a sudden we don't have higher highs anymore, we now have lower highs, and we can start a completely new trend channel here. This is the basics of how prices are moving in trends. And I know there are some people out there saying that, well, every movement in the market is completely random. And we cannot do this. It is completely random if we can draw these lines. The funny thing is that I'm working with this every single day, and I can draw trend lines on almost every chart at some point or some time frame. And if that is random, it is a bit funny how it happens in all charts every single day. So let's have a look at my laptop and I'll show you an example both on the manual way to do it and on the automatic way to do it. So let's jump into the laptop. Alright, we are at the computer screen now, and as you can see I have pulled up a chart here of the large US stock called Accenture. I just picked this one randomly. I think I looked one or two, maybe three charts before I found one with a good strong trend. We are, as always, in Tradingview here. That is my favorite charting tool. There's a link to it below. But right now, we're going to draw some trend lines. And as you can see, what I talked about before was that price moves in certain patterns. As you can see here, we have some sort of bottom here. Then the sellers come in. The buyers are going to come in here because they want in on the bullish action. So they're buying here. And some sellers are taking profit here, buyers are coming in, and so on, and the price move in a trend here. At some point, we might be tempted to draw a trend line. I normally use this one out here. If it's not here in your version of Tradingview, just push that little arrow here, and you can choose between a lot of different things. You can see some of my tools here are marked with a yellow star because I marked them as add to favorites, and that means that I already have it down here in my favorite toolbar. But those of you not using that, you can just use this one. What we can do here is that we can do this manually, and we can try to figure out somewhere to draw this trend line. And you can see it's quite funny how it bounces on this trend line every single time, or at least almost. We can also do that we press Ctrl C and then Ctrl V, then we have copy pasted a parallel line to this one, and we can try to fit this one into our chart. But as you can see, right now we are looking at the chart in hindsight, and that is of course always the easiest, so it is easy for me to see exactly where I should place my trend lines. It's not always as easy when we're looking at the end of the chart out here. But at some point, at least, we can see that the price tends to accept that this is a trend, this is a trend channel we are moving in, but now it's starting to break down, and we are making a new lower low. We even try to push lower, but the buyers are getting in, and now it is all getting a bit messy, because where should the trend channel be now? Of course we could do something like this and say, well, when this channel is broken upwards, we are going long in the stock again, we are going to buy, and then we can start to paint even new trend channels here. And of course I took this example with Accenture because the trend was quite obvious. It is not always as obvious as this, but I hope that you can see that the trend is built from higher lows, higher highs. At some point they are broken, and every time they break, well, you can decide what you want to do. I know some traders mainly trading from these trend channels here, and just saying, well, when a trend is broken upwards here, I'm going down to a lower time frame. It could be 4-hour charts or 1-hour charts. I know Tradingview looks a bit funny here, but then they are timing their trades from the lower time frames. That's also a possibility. However, right now I just painted these channels just with normal trend lines. There is a tool, and that is not the automatic tool I talked about in the beginning. You will see that shortly. But there is a tool that makes your channel making a bit easier. That is also if you go into the menu here and you choose the one called parallel channel. When I choose that one, I can, just as I did before, draw a line where I want it here. Then I press the left key on my mouse here, and then I just drag my mouse out, and it draws a parallel channel all automatically here. But still, I need to decide what points they should be at, and of course it could be all over the place, and that is what sometimes makes technical analysis a bit messy and a bit subjective, where you could take 10 different technical analysis and pretty much get 10 different drawings on your chart. So I do understand the people criticizing technical analysis a bit, saying that it is very subjective. And that is one thing I don't want in my analysis. As you might remember, I'm always talking about getting it as automatic as possible. So that is why I'm going to show you this completely automated tool that at least takes something like 95 or 98% of all the decision making out of the picture. First of all, I will remind you of a concept that I taught you in another video, and that is something called standard deviations. And I'll not go into the math or anything here today, but a standard deviation is a statistical tool where you are taking a set of data points and you are making some sort of mean, some sort of average here, midpoint in all of this data set. And then through this calculation of the standard deviation, it is a bit complex, so I'll not go into it today. But with this calculation, you can say that you will have 68 of your data points lying within what is called one standard deviation to each side. That means that at any given time, at any data set, you use this calculation, you have this mean, and you're saying, well, now I know that about 2/3 of the entire data set I have, they lie within these two limits here. You might want to be a bit more certain, and I will get back to you to the chart in a second and explain to you why this is important for us, but it is just to explain the concept. You might want to be a bit more certain that you have all the data within your limits, so you can choose to use 2 standard deviations to each side. That will give you a 95% certainty that all of the data you have and you want to have included are included within these 2 limits. Alright, so 2 standard deviations, that is what you should remember here. Let's go back to the chart here. Now, before I drew the channels automatically, but you do have a tool in Tradingview that can do it all for you. And it is not magic. It might seem like that when I draw it in a second, but I'll get back to that. There are both some pros and some cons to this. But you use this trendline tool arrow as well, and then you go down to the bottom here and find what is called the regression trend. And you can see I have that out here as well. The regression trend is making the midline for you. I can draw it here. I find a bottom, and of course I don't know that this is a bottom before we are a bit into the trend, but I'll get back to that because that is one of the pitfalls we can fall into. But I'm drawing this from the bottom, and I'm saying that I want the tool to measure all the data points up until this point. So this is from the 10th of May to the 10th of July here. This line you can see, this grey line that stretches out between the 2 other lines, that is the mean, that is the regression line, the best possible fit of all of these data points. And what we ask the tool to do now, and we can just zoom in a bit here, what we ask the tool to do now is to make a regression line, the midpoint here, and then put a line of 2 standard deviation on each side. If I go into the tool, just double click on it here, I can see that the upper deviation 2, the lower deviation 2, I can use different colors if you don't like the colors here and so on. But basically this is a regression line, a midline with 2 standard deviations stretched out on each side. And as you can see, I'm not doing any drawing of the channel myself here, not at all. This makes it all. And you know, in theory, as I mentioned before, 95% at least of the data should be within these 2 limits, and that actually fits it all pretty well. What also happens when I keep moving this on as the days go by, the channel changes because more data sets are coming in. And at one point we might get a drop straight out of the regression channel here, and that is a sign for me that now I might want to look at the possibility of a trend shift. Now I'm also using my other tools. If you remember from my other video, or videos from the Learn My Strategy series, where I'm talking about the RSI and I'm talking about the comparative relative strength. So I'm not just selling a stock because it breaks out, but I just have a look at my indicators as well and saying, does this indicate that the trend is really broken? And here it might not, so we'll just keep pulling this one out. And you can see as we go, it gets a further and further and wider spread data set, which makes the two standard deviations going farther from each other. So here, at some point, we can see that we actually break out of the regression channel here. We might have a look at our indicators and it indicates, yes, we are going down, and then we will sell. As I have mentioned in several of my videos, this strategy that I'm using, it never gets me out exact at the top. But that is okay. I can live with getting out here. If I got in here, for instance, taking some sort of profit. This was not the largest of profits, but it keeps me in the really long-term trends, and it gets me out of the trend. Now we can see here in hindsight that it turned up again, but it might just as well had continued down, and then we would have gotten out very quickly. Now, what happens? Well, now I think a new trend has begun. All right, then I just go to the top, to the candle that is the top point of what I think is a trend change, and I start to draw a new trend channel, and the days goes on and on and on, and all of a sudden we get a movement that is so strong that it cannot be contained within the two standard deviation, which tells me now might be a good time to get in. So I start drawing a new channel here. I might just enter with half a position or something like that here, and if it keeps going, I'll enter with the rest. But I start with the low point here, and here is one of the pitfalls, because as you can see, now that there's almost no volatility here, it's just going up, and that makes the regression channel very slim here. It is very slim, and when you see something like that, you should know that there will be some sort of correction at some point that will definitely break out of the channel, because this channel cannot keep going forever. But let's just say here, let's say that we were actually here and saw that it broke down. This would be what we would be seeing in real time, and we could see that, oh no, it started going up again, and maybe our indicators down below showed us that we had actually not entered a real bear trend. So at some point we might say, alright, this was not a break of the channel, so I need to draw it a bit further, and all of a sudden you can see that we are well within our two standard deviation regression channel here. I hope that made some sort of sense to you. Now what you can do when you're using this regression channel, because that can be used for a ton of different things. But what I am using it for is some sort of confirmation of the trend, so that if I, as you know, in my normal trend schedule, I have a green, a yellow and a red zone depending on my indicators, as I mentioned in the other videos. And if I get maybe a yellow zone, and that is where I need to be a bit cautious about a stock, and at the same time I see it breaks out down of its regression channel, that can actually make me sell. But when I see some medium-term regression channel here is broken upwards, and I can see the exact same in my indicators, I would be very confident in taking a long here. If you don't get in on this long trade, you can wait until it bounces on the bottom of the regression channel, and it just probably keeps on going. Well, you never know, but what can be a benefit is that you try to pick your trade as close to the bottom here as possible. You don't need to use my other indicators, you can use this combined with whatever strategy you're using. But if you're getting in here and it quickly drops down and breaks the channel, then you can get out with a very small stop. But if it keeps going up to the top of the channel, well, then you know that there's a good upside. And let's say in a case like this, we'll just take our risk reward tool and saying that we went in here, for instance, because it had bounced on the bottom here. And we say if it drops below the channel, we will get out. and we might continue up on here in a couple of weeks up until the top of the channel, and then we'll get out at some point here. If we did that, we would have taken a risk that was from our entry point and down. That was 2.88% down. But we would have maybe a target around 6% up here, meaning that we have a risk to reward of 2.14. So our reward, if the trade goes in our direction, is twice as large as the risk we take. And that is one of the things technical analysis is really good at. That is having stop points and target points and stop losses and so on, so you can always calculate what is my risk to reward. That can be a bit tough if you are only a fundamental trader, because when will you know when to get out, and how do you know how to set your position sizing? But all of that is for another video. This was primarily about trends, it was about trend channels, and first of all it was about the regression channel that not many people know about. I should say that there is one other regression channel in Tradingview. If you go up, you can't see it here, I'll just minimize it, it's like this. If you go up to the indicator and strategies up here, to the build-ins, and you find the linear regression channel here, it should be added. I'll just remove all the other stuff I put on here, and you can see, maybe, yes, here you can see the regression channel I just put on, meaning that if we delete that, sorry, here we have it, linear regression. And if I look at the settings here, we can see that it is set to account, meaning that it always goes back, as long as I keep the 100 there, it always goes 100 days back, and taking the 2 standard deviations for that, and you can see it just keeps going like this. So if, for instance, I did change this and set it to 50, like this, you would see an entirely other regression channel. And some people use this and just have this at fixed maybe 25 or 50 or 100 days, so that they can keep track of if the overall trend is turning around. But that's just to let you know that there is another linear regression tools in here. It is not the one I normally use, it is the one here in the menu that I can just drag and drop like this. Alright, I hope it made sense. If it didn't, just write me a question in the comments, and I always love to hear from you down there in the comments, so feel free to ask me anything or give me some ideas for new videos. Alright, if you haven't done already, remember to subscribe, hit the bell notification, like button and all that. I am looking forward to seeing you again very soon. Take care of your money out there. Bye for now.